Hello guys, welcome back to Money Journal. Today I have a very special video for you guys. In this video I will talk about the current market situation, the macroeconomic state of the economy in the United States. Then I will talk about why I'm still very optimistic about the market, and I will present my bull case, and then I will talk about the possible scenario that will happen in the future. So if you are interested, please tune in this video. So first, I want to talk about the current market situation. 2022 had been a really rough year, and this year has been really good for the stock market. There are a lot of optimists about the economy, and there have been a lot of good things happening in the economy. Inflation is coming down a lot. Now we are in a really good state. Inflation is coming down, and I do believe core inflation, which is what the Fed is looking for, uh, is starting to come down and catching the CPI, because now shelter is will start to come down, in my opinion, because there are a really big lag effect in the housing, because even though inflation is coming down, shelter is not coming down. But now, since the rates are coming into effect, I do believe core CPI is coming down, which will be good news in the future. But inflation is coming down, economy is holding strong, really strong. It's looked like a miracle, but it's not, because there were a lot of savings, a lot of stimulus in the economy, and now we are like draining it from the economy. So that's why the economy is really holding, but it's gonna be difficult in the future for the economy to continue to hold with these high rates. But Fed Chair Jerome Powell said the high rates is gonna stay for a little longer. They can do that because the economy is really strong. That's why they are doing that, and that was the reason why the stock market is not doing well in the August and September month, for example. But this is the current situation. A lot of optimism this year. The stock is up. Nasdaq is up almost 30% this year. S&P 500 almost 13%, but the S&P equal weight index is it's neutral. It's down 0.8%, but I will talk about that later in this video. So at the moment, the stocks are down almost 10% in the August and September month. And why that happened? That's because the Fed said that rates will gonna stay higher for longer, and the rates and the 10-year treasuries are going up a lot, which puts pressure on the stocks. So if we have higher rates, the future earnings of the stock will value less, so the stock's worth is a little less. So that's why the stocks in general are down for these last 2 months. So that's a macro situation. Now I will talk about why I'm still optimistic about the stock market in the future. So first, let's talk about valuation. When you look to the S&P 500 valuation, it's trading around 18 PE, 18 forward PE. So it's not lower, but it's above the mean. When you look to the last 25 years, I do believe 18 is a little bit above the mean. The mean should be around 16, I do believe. So it's a little higher, but in my opinion, that's not so high that you can say the stock market is overvalued, especially because big tech is they have a higher weight in the market than it was before. So when you have high quality companies, you have to assume a higher P. If you have a really great company with high returns on investment, with high growth, with high margin, you always have to evaluate that company at higher P. And when we have higher weight in the S&P 500 of really high quality companies, it's normal that P of that index it's higher. So I will not say that it's overvalued. For me, uh, in these days, the fair value of S&P 500 could be around 16, it could be 20, it will depend on rate, but there are an argument that if you have high inflation and higher rates, uh, the S&P 500 should trade at a lower P, and that's true, but inflation is coming down, rates are still high, but at some point we are close to peak rate, so it will come down, so we have to think always in the future. So I do believe this ATP, it's because we are already thinking the rate cuts maybe next year, or even though the Fed is saying in the higher rates will stay for longer, that not mean it will be around or above 5%. It could be maybe the neutral rate will be around 3% for the starting next year or in 2025. I don't know what will happen in the future, but if you look into the S&P 500, I can't say it's overvalued or undervalued. It could be fair value, I don't know, because the reason the S&P 500 is up 13% this year and the Nasdaq is up almost 30%, it's because big tech. If you look into the S&P 500 equal weight, it's not up this year. If you look into what happened year to date, it's tech, communication service that are carrying the S&P 500 and the index. If you look into the heat map for the S&P 500, for example, you will see Microsoft, Apple, Google, Amazon, Tesla, Meta especially, that are carrying the index. There are a lot of companies, a lot of good companies that are down year to date, so that might be where the opportunities holds. If you look into the mid caps and small caps, what I can say, it's S&P mid caps is trading at a PE under 13, and if you look into small caps, they are trading at a PE of 12, which is really under the mean. I mean, it's trading at 12 PE. If you look into the last 25 years, we are trading almost, for the small caps, we are trading almost at the lows of the last 25 years. It will be around 10, and we are trading at 12. Which, for me, when I look into it, I'm investigating, I'm searching into small caps and mid caps to find opportunities, and I'm really finding really good companies with really good balance sheets, with really good business, trading at a really cheap valuations, and I do believe it's one of the best opportunities out there to be around mid caps and small caps. I'm not buying Apple at the moment. I'm not buying Microsoft because I do believe they are overvalued. When I talk to Amazon, Google, for example, I will think they are trading at a fair value now. I was buying that companies when they were undervalued last year. Now I do not believe that's gonna be a really good investment, but looking into mid caps, small caps, I do really believe they are cheap right now. They are really good companies, but there are reasons they are cheap now, because with high rates, usually small caps and mid caps have a lot of difficulties to refinance their debt, or they will have to go to the market to refinance it. It's gonna be difficult in the next year, but if you are looking to small caps or mid caps, you should look into really good companies that have no debt, and really they have their net debt positive. And I'm finding that opportunities out there. So if you want to find some opportunity like that, continue to follow this channel. I will present you in the future. But that's one of the good cases. I do believe the S&P 500 in general, it's not overvalued, and these last 2 months the stock market is on almost 10%. That might be a really good buying opportunity again, but the economy has to hold strong, the inflation has to come down, continues to go down, and the Fed will have to do their job, and they might cut rates in the next year. I don't know, but so it can be a really good buy opportunity, but I don't know what will happen in the future. We can have another spike in inflation and the stocks will go down. Economy can start to have difficulties and we might enter recession and the stocks will go down, but we continue to have inflation going down, earnings to a lot of earnings surprise, and the companies continue to grow and increasing their profits. if that happens, I do believe this is a really good opportunity, and there are really good opportunities in the market right now. For example, if you talk about emerging markets as well, emerging markets are underperforming the index this year, so they are still cheap when we compare to to the US stock market, for example, and they are underperforming the stock market this year. So we might continue to have a really good opportunity until the emerging market explode, for example. But they are still cheap when you compare to history, but that might be the opportunities out there. So at the moment, when I look into my portfolio, most of the companies I own are still in the buy range. Others are an hold, but I still believe the companies I own, they have a lot to have a PE expansion, margins expansion. So I do believe they will continue to grow, and the companies I do believe they will overperform the stock market. So that's why I own them, because I want to overperform the stock market. So this is one of the reasons I'm still bullish and I'm still buying the stocks at the moment. Mid caps and small caps are really cheap when compared to history. Emerging market, for example, which is a big part of my portfolio, and it's one of the regions I'm finding really good opportunities out there. So then when I look into the stock market, still there are a lot of good companies down year to date, but I will stay away of big tech and the big cap S&P 500, because they are up a lot, and in my opinion they are overvalued. They are overvalued for a reason. They are really good companies. They have a really good balance sheet. They have high returns on invested capital, and everyone wants safety. Their safety, but buying at this valuation, I do not believe that is the safe way to invest. So I'm still trying to find the best companies out there at a discount, so I can overperform the market. So that's my opinion on the market at the moment. Even though the stock market is down in the last month, the last 2 months, some say that because there are a lot of seasonality on the August and September month. Others say that's because the Fed say that the rate will stay for longer, and there have been a spike in the Fed funds rate and in the 10-year, 5-year treasury, for example, and that make the stocks valuation go down. So that's some reason, but I'm still bullish in the US economy. I do believe they will continue to hold strong, even though it's gonna be really difficult in the future. But I'm trusting Fed Chair Powell that they are doing a really good job and doing what they need to do. So I'm hoping that if the economy starts to having difficulties, they will start in cutting rates and trying to improve the economy. So they have a lot of things they can do to improve the economy. So that's my key takeaways for the future. I don't know what will happen, if the stocks will go up. I'm really optimistic, but if we have another spike in inflation, the stocks for sure will go down. If the economy can't hold these rates and we enter recession, the stocks will go down. But I do believe there are a lot of reasons that the economy will continue strong and we continue to improve. And I do believe there are really good opportunities out there. You just have to find it and be using your method and trust your investments. So that's my opinion in the market right now. I hope you find it useful, and until next time, bye guys.